Cutting through the market noise, my name is Kamohelo Maishwani at Capital Link Partners.
Hi, I'm Simbitsen Goko, giving you a brief summary about the microenvironment in the first quarter.
Hello, I'm Similo Dingile. This is the Capital Link Partners quarterly update.
Edwards Lifesciences. So Edwards Lifesciences had their Investor Day conference on the 8th of December, which is just a few days ago. So this is more of a recap as to how the company has done during the year and also just their outlook for 2023. So in this conference, this was actually the first time they actually gave us outlook for 2023. And it wasn't anything that the market had not anticipated. So every year they give a 2028 global opportunity outlook. This has not changed since the previous Investor Day. So Teva, which is their biggest operating segment, for 2028, they're expecting a global market opportunity of $10 billion, followed by TMTT at $5 billion, and then critical care and structural heart at $2 billion each. So I'll start with Teva. The Teva segment, that's still quite fundamentally strong. Over the past 6 years, the company has seen double-digit growth, but over the last few quarters, you've seen a flatness and a slight decline at the end. And the main reason for this has to do with the COVID impact, which has actually impacted staffing shortages both in the US as well as in Europe, and that has negatively impacted the segment. And the reason for this is because then hospitals have to change their resources and move them from surgeries which would generally be dedicated for Teva treatments towards other surgeries. So just in terms of tailwinds, why we like this company, the first reason would be the fact that it fits in well with our aging population investment theme. So the Teva segment, that specifically deals with elderly population in the developed markets. Also, the Teva segment has a very low penetration. You're starting to see an increase in elderly people. So just to touch a bit more on this aging investment theme. So in the US specifically, 10,000 people per day actually turn 65 years old. So what you're actually starting to, and actually by 2030, all baby boomers will be 65 years and older. Teva deals with heart valve diseases, and this is important because for this specific heart valve disease that they treat, as you get older, you're more likely to get it. So this presents a potential global market opportunity for the company, because as more people get older, they will more likely need surgery for this heart valve disease. So the way they're planning on actually improving the surgery numbers is through diagnosis and also just equality in treatment for elderly people. And then there's TMTT. So the TMTT, the TMTT treatment, that deals with also just the type of heart valve where the heart doesn't close properly. This segment also just deals with a certain type of heart valve disease. So the main difference between the Teva and TMT segment is that with the TMTT, this heart disease is actually is more common than Teva, but it's quite a complex and very underpenetrated market segment. So another tailwind for TMTT is the fact that they recently just launched a new product, and they're actually expecting to be one of the replacement leaders by 2023. The main headwind for this segment would just have to be the stricter regulatory requirements that they're actually seeing in Europe. And then in terms of just the structural heart segment, they're expecting mid-single digit growth. And then in terms of just the critical care over there, their main issue has to just do with the potential recession that the US may get next year. And if this does happen, hospitals will have to just cut down on their budget. And that will, of course, just slightly negatively impact sales. Overall, we're quite bullish on this company. This is one of those companies we've had in the fund for quite a long time. In terms of just valuation, it is slightly expensive, but the rating has come off. However, we like this company because they mainly focus on organic revenue growth. R&D for this company is around 17 to 18% of total revenue, which is quite a good percentage for a medical tech company, because that means that they're planning for the future. So just in terms of the company's guidance, so for organic sales, they're expecting revenue growth of between 9 to 12% for the year, which is between $5.6 billion to $6 billion. And then they're also, so that means that average selling price is expected to be stable, which is good news. And EPS as well, that's expected to remain flat or grow by 6%.